Growth hacking is all about creating a team from the already highly skilled workers of a company and using that team to grow a product. Collaborating across standard company departments elicits radical ideas, builds intercompany camaraderie, and has been proven to increase productivity. Ellis and Morgan Brown come together to deliver a book that gives step-by-step details and directions on how to build a growth team and change the way companies grow products acquisition, activation, retention, and monetization. Questions this book answers. What is a growth team? What are experiments? How does a growth team work? Essentially, most companies are built with divisions of labor within the company. In most cases, there are different silos where one silo is software engineering, another is marketing, product management, data analysis, and product designers. Commonly, these groups of highly skilled people work within their own clusters and rarely collaborate. Ellis discusses the disservice that working completely independently of one another does for a company on the cusp of growth. In order to flourish, he boldly states that companies need to break down the barriers between silos and build up a growth team that moves freely amongst all silos. This growth team is built with careful consideration for the purpose of taking a product and launching it successfully. Each silo should still remain in the literal world. Most, but not all, companies are focused on more than one product at a time, and it's necessary for engineers, designers, and so forth to continue working on the caseloads. However, at least one person should join the growth team. What is a growth team? A growth team is a group of people comprised of each silo that come together to create ideas, run experiments, and make the changes necessary to launch a product successfully, garner supporters of the product, and maintain the growth of the product. By selecting a person from each silo, the team creates a unit that can move throughout the company, sharing information, inspiring ideas, and collaborating on a level that inspires one another to greatness. Who should be on the team and why? A growth team needs the following skilled persons in order to function at maximum capability. First and foremost, a growth team needs a growth lead. This person has to be able to run a team and make executive decisions. They also need a great deal of knowledge about data analysis, experiments, and the product. In a small startup, this person is typically the founder, but it doesn't always have to be. In the event that the founder of the product is not the growth lead, the growth lead needs to be the founder's right-hand person and be able to make executive decisions regarding the product and have access to all departments. The team also needs a product manager. This person generally oversees the product and all of its functions. Product managers typically work with all the other silos in order to fully develop their product, so they are a crucial asset to have when it comes to picking people from other departments to be on the growth team. Software engineers are creative people and are very beneficial to growth teams. Often it is the software engineers that are writing the pieces of codes that create the experiments needed to create data to foster growth. Having a software engineer on the team who can make suggestions about the codes and capabilities of the project can lend to experiments coming together more quickly and highlighting tasks and aspects that might otherwise go unnoticed. Marketing specialists, especially in combination with the software engineers, will enhance the idea quota for the team. For different companies, there are different marketing specialists. Ellis mentions the co-author. Morgan Brown utilizes his email marketing expertise for his growth team versus having a content marketing specialist for products that are trying to build leadership. Whatever product the company is trying to grow will point the direction to the marketing specialist that the company should enlist to aid them in their growth hacking expedition. A crucial person of note on a growth team would be a data analyst. This person might not work full-time on the growth team, but a company is going to want to enlist a data analyst who can really expose what data there is available, mine that data for the most pertinent information, and present it in such a way that the rest of the team not only understands it, but is inspired to create experiments by that information. To quote Ellis, a standout data analysis can make the difference between a growth team squandering its time and mining data gold. Ellis reiterates numerous times throughout the book that simply employing Google Analytics will not suffice in collecting enough data and generating enough information from said data. Finally, the last member of the team needs to be a product designer. Product designers' skill sets vary depending upon the product the company is growing. Product designers can up the pace of how quickly an experiment is executed because this designer is on hand to create whatever is necessary to run the experiment. Product designers are great for coming up with ideas for the idea pipeline as it gets going. How big should the team be? A company's growth team could have 2 or 3 people from each department on their growth team. They can be as small as just 1 from each department, or over 100 people may work on the growth team, as is with LinkedIn and Pinterest. It depends on the size of the company and its needs. When a company is first starting to form a growth team, it's best to start with a 1 or 2 from each department and get them acclimated to the idea. Is everyone going to be on board for this radical shift in thinking and working? No, but can the success of the growth team over time sway their opinions? Yes. Like the company, the departments, and even the growth team itself experience success, there will be less resistance and more enthusiasm for the new team. How does a growth team work? Well, that's covered in future chapters, but the growth team's purpose is the growth hacking process. There are 2 types of reporting structures for growth teams: product-led or independent-led growth teams. A growth team will grow and evolve with time and become a highly beneficial entity of the company. First 15 minutes, metrics review and updates, key positive factors affecting the product, key negative factors affecting the product, growth focus area defined. 10 minutes, review last week's testing activity tempo, up next tests, postponements. 15 minutes, key lessons learned from the analysis, discuss results, answer questions, and take suggestions. 15 minutes, select growth tests for the next cycle. Each member gives a summary of their chosen idea. Groups discuss which experiment to do. Consensus is ideal, but the growth lead makes the final call. Final 5 minutes, check the idea pipeline to make sure people are still adding ideas. In order for the meetings to be successful, they must be efficient. No amount of team collaboration, innovation, money, or celebrity endorsements will make the product succeed if it's not something people feel they can't live without. Obviously, some products are more must-have to specific populations. It's the company's job to figure out if their product is demand-worthy. Who wants it and why are two questions the growth team must have answered in order to begin hacking acquisition. Marketing needs to know which channels to start scouring, and that only happens when the company knows who the target audience for the product will be. Ellis mentions that the only time there is an exception is if the business is social media, social network related, because then the core value that makes it a must-have is the other people on the platform. Sometimes discovering the core value of a product is an accidental discovery that comes from data diving what the product users are doing with the product via surveys and interviews. Yelp, mainly a social website for reviewing local businesses, was built out of a completely different product, and the social reviewing aspect was a very small part of it. People have to love the product in order for it to grow, otherwise, the initial growth was a flash in the pan and the product will eventually meet its demise. So what makes a product successful? Well, it all revolves around what Ellis has coined as an aha moment. The aha moment is when the user discovers the product's core function, and that core function fulfills and satisfies a need the consumer has. Reaching an aha moment can happen pretty quickly with some products, but takes some time and possibly more product development with others. Getting a user to be drawn to and repeatedly try a product will help them attain the aha moment. Using the must-have survey will garner much-needed data to examine in order to find out whether the product is going to survive or not. If the results of the survey are 40% or greater, then the company uses the follow-up survey to guide them to the next steps of having a remarkable aha moment product. In order to properly administer the survey, the team should query at least 100 active users and try to make as many phone interviews with active users as possible. After data diving and discovering what users are feeling is the must-have component, a company will then proceed to start running experiments on how to get to the aha moment faster and continue to retain users. Ellis mentions that often it is what is pared down that reduces friction and allows users easier access that fosters more aha moments. It is also worth mentioning that once a product is in demand and all is flowing smoothly, that adding more features can be done, but should be done with discretion and only after rigorous testing with small groups of users so as not to deter existing users from continued patronage. High-tempo testing. Once the team has completed the ideation stage and is ready to test, then the idea is to test as many experiments as possible. One caveat is that a company should only run the number of tests they can successfully implement with appropriate resources, time, personnel, and data analysis. If the team is running 30 tests a week but they are mediocre at best, the tests will be inconclusive and a waste of time and resources. Starting off small and then increasing experiments as the team develops the skills and assets to run the experiments is the best model for success. The reason growth teams try to run as many experiments as possible is because many of them fail. Or they are inconclusive, or they make small gains but need improvements or more data. Small gains compounded will lead to more success more often than windfall gains that only happen on rare occasions. There are two things a company and growth team need to analyze and experiment on in order to acquire consumers: language, market fit, and channel, product fit. Getting the consumer to pay attention to the company's product begins with the language, market fit. The initial message should give them adequate information about what the product is and does so without overwhelming the users. 8 seconds is all the time that marketing has to get a consumer to pay attention to their product. In the 8 seconds that it takes someone to look at a product, they have to be drawn in and know what their product's purpose is and how it will change their life. That's why the language used in the market that the company's product is in can make an enormous impact on bringing in customers. One of the growth team's first experiments should be on language, market fit, trying out as many variations of wording as possible. Sometimes running these tests will lead to discovering that the product's language needs a complete overhaul. In order to find the language that resonates most with the consumer, Ellis and Morgan recommend running quick A/B tests using Optimizely, as it can procure the results from running dozens of variations rapidly. The language needs to be short, sweet, to the point, and the objective should be that it names the core value of the product. Language, market fit in place, the next objective is to find which channel to market the product in, which Ellis has coined as channel, product fit. The fastest way to find the channels to market in order to acquire users is to examine the behaviors of the consumers already using the beta version of the product. Where are they shopping? What searches, on which search engines, are they using? For example, if the product solves a problem that people are looking up, then search engines will be a channel worth marketing in. Dabbling in a variety of channels is not recommended as a method of discovering the best channel product fit. The time and resources that the team would put into marketing the product across even 3 channels to only find out none of those channels were viable options would deplete morale and probably tank the product. Doing due diligence, analyzing data, examining the other similar products that are already on the market, and making use of surveys and interviews will point the direction to the most productive channel to invest energy in. The 3 categories of channels are viral, word of mouth, organic, and paid. Within these 3 channels are numerous marketing options. In order to choose which channel to use, consider the following methods listed. First, cut out the channels that will absolutely not work for the product. Second, examine user behavior and correlate marketing to the obvious channel. Third, experiment, and keep your experiments optimized and tidy by identifying and ranking from 1-10 these attributes: cost, targeting, control, input time, output time, and scale. Fourth, design customer loops. There are viral loops which are word of mouth, and then there is instrumented virality which creates a viral loop within the product. An example of this is Hotmail's email closing. They attracted virality by making a line of dialogue under the emailer's signature that basically said, "Get free email. Click here," so it was an instrument within the product that created the loop. Design loops are loops where people are excited to tell their friends about the product they are using and they are happy to get others to sign up. Incentives like a $10 discount on their next mobile grocery order for each referral up to 5 referrals, or $10 discount on their first order if they provide 3 emails of friends who would want to try the app. Finding the right channel product fit can be tricky, but it's literally what the growth team was designed to do. If the growth team uses acquisition, specifically how many people they would like to have purchase, and they start the growth hacking process of analyzing, ideating, testing, and then reanalyzing what they have found out, they are bound to find the best channel. Plus, this isn't an aspect of growth hacking that goes away. In order for the product to flourish, there has to be constant growth in acquiring users and retaining them and current users, which means other channels will need to be explored for possible marketing to keep the product going. Activation means consumers using the product. The basic idea is that if the user discovers the aha moment, then they will see how the product benefits them and use it or keep coming back. To figure out how to get a consumer to get hooked on the product, the growth team needs to map every conceivable way the user gets to the aha moment, including the channel they come from to find the product, to begin with. By doing so, the team will be able to run experiments that minimize negative friction, increase positive friction, and discover why some users are dropping off. All this data should be put into a funnel chart. The funnel chart shows the progress that consumers make using the product and gives a very visual demonstration of activity if proper metrics were set when focusing on the goals and experiments used for acquisition ideation. Mapping where users are coming from and what they are doing and creating a funnel chart should streamline data analysis and can be rounded out by conducting a few simple surveys. The surveys should be super simple, no more than 2 questions, and they need to be open-ended, such as, "Is there anything we can do to make your visit, use, experience better?" This question can be used effectively when it is triggered by a user remaining on a page for a certain amount of time. Another option for a simple survey is to have it pop up right before the final transaction is complete and ask, "What was the best part of your experience with our site, product divided by etc." Having dialogue by consumers that appear to be both lost and those who are actively engaging in the product will give the team a wealth of information to analyze and implement in future experiments. A few key highlights to acquisition: it may take 10 experiments, it may take over 68 experiments to figure out how to get the user to interact with the product. Persistence is key. Continuing to examine what the pros and cons of the product are will lead to experiments to run and improvements to make. A big part of examining the product from start to finish is finding the friction that deters users from getting to the aha moment. As developers, it's hard to see where all the strife can be because the creators already know what's supposed to happen. But to the new user, that experience of confusion and friction can be the drop-off point. Think of the new user experience as making a first impression. Most of the time, there's only one chance to make a first impression, so it better be good. If the opportunity for a second impression occurs, it needs to draw the consumer in and keep them there. That means the landing page needs to be explicit in its information and communicate the product's relevance, show the value of the product, and provide a clear call to action. After ridding the product of much of the negative friction, it's a good idea to start experimenting on adding positive friction. It sounds counterproductive, but positive friction slows the user down just enough to point the way to features or the aha moment needed to maintain activation. An example of positive friction is interactive onboarding, making entertaining tutorials on how to get the most out of the product. Video games have honed this science to near perfection and get gamers in flow or in the zone rapidly, which keeps consumers using the product for long periods of time and repeatedly. The final key aspect of activation is triggers. Triggers are worth mentioning because they can be a powerful asset that adds to activation or extreme annoyance that deters users. A trigger is any sort of alert or prompt that provokes a response from the consumer. It can be an email, pop-up, push notifications, or landing page call to action. The reasoning behind a trigger should be that the trigger is alerting the user to an opportunity, not begging them to pay attention to the product. Gaining users is important and retaining them is nearly as priceless. Much like small wins and experiments compound to large growth and achievement in product growth, the compound value of retaining users leads to a continual increase in revenue and growth. According to Brown and Ellis, a 5% increase in retention can lead to anywhere between a 25% minus 95% increase in revenue, so it literally pays to experiment to find out how to retain clients, consumers, users. What does it take to create retention? To begin a high-quality product that solves a problem or improves the user's life is the first step in retaining customers. There are 3 stages to retention: initial, medium, and long-term. In the initial stage, the experience can be improved upon. Keeping the rate of churn low needs to be one of the growth team's priorities. At the medium stage of retention, the novelty of the product has worn off and growth teams should be concerned with creating habitual use of the product. Products that have stored value, like Evernote, where the more a consumer uses it, the more value they add to it, helps maintain medium retention and turn it into long-term retention. One model that growth team can really emulate to keep them on track when it comes to retention is the hook model, which looks like the trigger leads to action, which leads to the reward, which leads to the consumer investing, which starts the trigger all over again. Each company measures retention for their products differently. It is critical to be using the correct metric for retention. Facebook tracks retention by daily interactions, iPhones by yearly purchases. Airbnb considers at least 1, if not 2, books a year good retention. The point being that examining retention by specific metrics based on the product, the user's behavior, and data diving, the growth team can better design experiments to improve retention. Of the many ways the growth team can improve retention, there are tangible and experiential rewards. These can include, but are not limited to, brand ambassadors who get perks for being high-ranked users, recognition from the product such as personalized emails or public mention on blogs, forums, and personalization of content. Personalization of content walks a fine line from being flattering and helpful to being invasive and creepy. Amazon has nearly mastered the art of personalization, as each person's Amazon landing page is specifically tailored to that individual's shopping habits and interests based on that person's individual data. Besides drawing users into continued use through rewards, there is also resurrecting the zombie users. This can be done using triggers like emails. One bonus to resurrecting the old users that have gone dormant is that they already know the product, so with a few well-placed notices and perhaps some incentive, it shouldn't take much to bring them back. Products need revenue, money, to survive. In growth hacking, looking at the LTV, or lifetime value of consumers, helps construct a monetization funnel. Gathering the data that reflects the user's moves within the product from start to finish draws a monetization funnel that depicts every opportunity for making money. In order to delve into data that is key to raising revenue, the users need to be split into cohort groups. Groups should be split into high and low revenue producers, and then those 2 groups can be parceled down further based on other traits that users have in common. Those traits, those details about each consumer that link them together as high revenue contributors, are highly beneficial data. The more growth teams know about the people that are putting money into the use of the product, the more they can experiment upon those factors to try and generate more revenue and to encourage lower spending users to upgrade. One item of warning: apparently Mac users were more likely to be big spenders, so the travel company Orbitz charged people they knew to be Mac users more than other customers who say used PCs. Once Mac users discovered this information, they were less than pleased, and Orbitz lost a good deal of business. So while data mining personal information is beneficial, it should not be the reason a company goes under because they offend half their profitable users. When pricing the product, there are a few pertinent details to keep in mind. Pricing needs to be optimal. If the pricing is too low, then the company is losing money opportunities. If the pricing is too high, then the company is losing customers by turning consumers off to the product. Plus, once a price has been set, it is super tricky to get users to get on board with paying more without good cause and significantly increased product value. When pricing a product, be aware of pricing relativity. Users compare prices, so if one product is more expensive than a similar product, consumers expect the pricier product to have a better core value or yield more entertainment. There is also the penny gap price pitfall. If people have been getting a product for free from another company that is basically the same as the new company's product, they are not going to want to pay money for it at all. In which case, some significant time will need to be placed on marketing it to consumers in such a way as to demonstrate the product being superior to the free product, or having a freemium version and then winning the user over to the paid version. The final issue with pricing that a company must be careful with is that the growth team and the sales team are collaborating. Having a sales team marketing a product for a certain price while the growth team is testing out different prices entirely in different cohort and control groups would be an embarrassing circumstance for a company to find itself in. Though it may seem that pricing the product is quite daunting with all the obstacles mentioned above, the growth team has ample resources to overcome those obstacles and create pricing success. Some questions that Ellis and Brown developed to help with pricing are included in a simple survey included in the action portion of this idea. Once the survey is completed, the next step is to delve into the psychology of the buyer and using that knowledge to gain paying customers. There are 6 areas of the buyer psychology that can be used to hack revenue. The first is reciprocity. The buyer buys because they already feel that the product has benefited them in some way and they feel a need to reciprocate and make a purchase. Commitment and consistency. In essence, this is a snowball effect of people's behavior. They invest a little at a time, making small purchases more and more frequently until they buy a larger purchase or upgrade from a freemium to a paid subscription. The principles of social proof. This is the desire to follow social norms. People like what's trending, and if the product is reviewed as something that is must-have by credible reviews that are realistic, then people are more likely to invest in that product as well. There is the principle of authority. If someone of credible authority, an expert, a doctor, a leading educator at a renowned university endorses the product as being valid and worthwhile, then people are more likely to invest in the product because they trust the person of authority to advise them correctly. Another principle is the principle of liking. People invest in things that have people they like on them. Airbnb uses this principle when they have people refer their friends. The referral comes with a picture of their friends on it, so they are seeing someone they like enjoying the service, and it can motivate them to give it a try as well. Finally, there is the principle of scarcity. This is where having a notice that says, "Only 4 left in stock," or "This offer is only good until the end of the week," motivates people to buy before they never have the chance to get that product or that deal again. The final thoughts on growth hacking are that growth comes from continued experimentation and perseverance. Growth hacking is not just for new startups or brand new products alone. It is for any company or product that wishes to make more of itself. Avoiding growth stalls will be the largest challenge that growth teams face. It's important that growth teams are continually monitoring their data, their channels, competition, and consumer happiness with the product. Complacency is a deal breaker. It kills growth. Being overconfident because of great success and huge revenues leads to complacency. And then before a company knows it, they have stalled, and suddenly they are either completely incapable of making a comeback or they are fighting for their survival when they were just previously living the dream. Sometimes growth stalls are unavoidable, such as when talented team members leave to start new ventures of their own. This can leave a growth team in a lurch looking for new members to fill key roles. Ellis mentions that it's necessary to find balance in a section he calls swimming with sharks. Teams have to be constantly innovating and testing ideas. Sometimes growth happens so quickly that the team gets pulled away from the growth focus to main the jobs that they had in their prior departments, and they get bogged down with other responsibilities. This is a great, but confounding, problem to have. It's important to prioritize. If a team is slowing down and at a growth meeting they realize they haven't run nearly enough experiments as they asserted they would, then they have to make the growth team the priority and get back to the growth hacking process. However, since the team is experiencing such a boom in growth and is juggling quite a bit, it is appropriate to dial back the tempo a bit until the team finds balance. Teams should not forget that before moving on to seemingly greener pastures, they need to exhaust all their options with their current growth hacks. Have they tried all the possibilities listed earlier for acquisition, activation, retention, and monetization? What more can they do to expound upon what they already have done? This is called doubling down and can be highly effective. But to double down, and even to move on to greener pastures and find new channels for growth, the best process is through mining data gold. Companies need good data analytics and good data analysts to interpret the data that will lead the way to continued growth. Finally, don't be afraid to take chances. Open up the ideation to the rest of the company. Fresh perspectives give way to intense ideation. After all, they haven't been mulling over the same quandaries for weeks and can see it from a new angle. Also, in the vein of taking chances, Ellis says to take moonshots. Think outside the normal ramifications of what it means to grow a company and get out there and go for it. Growth teams need to meet once a week, possibly once every 2 weeks. Scheduling the meetings midweek allows for team members to have a day or two before the meeting to complete tasks, gather data, and be prepared for the meeting. Having 1 or 2 workdays after the meeting allows the team to get to work on the ideas and experiments they have elected to run while the ideas are fresh and the momentum is strong. There are 3 stages of growth team meetings: analyze, ideate, and test. Then the team loops back to analyze what they have tested and then start the process all over again. In the analyze stage, the growth leader works closely with the team's data analyst and goes over all the relevant information pertinent to the product before the first growth team meeting. The marketing specialists survey the current consumers to gather information for the data analyst. When all the information is digested, it is then put into dashboards that are easy to understand for every person on the team. The second stage is where the team ideates on the experiments that could help enhance product acquisition, activation, retention, and/or monetization. Experiments are derived from the ideas that the growth team collaborates on. Each member is required to create an idea based on a specific format. That idea is then added to the pipeline of ideas, and depending upon the resources, timing, and growth lead's expertise will be carried out when the time is optimal. Each idea contains the following components: name, which needs to be under 50 characters long; description, which contains the who, what, where, when, why, and is written as an executive summary; an hypothesis, which needs to posit what is expected to happen based on the changes being made. The hypothesis should also contain a percentage of expected gains. After all the ideas are presented, then it is time for stage 3, prioritize. Each idea needs to be scored by the author of the idea with a nice impact. How much will the idea improve the focus metric? Confidence, how strongly the author feels it will create, and ease, a measure of time and resources needed to implement the experiment. The ICE score is on a 10-point scale. The higher the number, the better the score. Once the ideas have been presented, the scores have been analyzed in a spreadsheet to make the ideas more objective and easier to ascertain. Then it is time to pick the first couple of ideas to test. Stage 4 is testing. Cross-functional collaboration comes to the forefront in this stage of the growth team meetings. When testing ideas, the outcome has to have a 99% statistical confidence level, which means the control always wins. If the test doesn't meet the confidence level or is inconclusive in any way, then the initial design remains until further testing can be completed. It is better to remain the same than to expel time and resources hoping that the data will change and the outcome will be different if the team just gives the experiment another few days or another chance. Once the testing is complete, then it is back to stage 1 where the data from the test is analyzed and the process starts all over again. There are 4 stages of growth teamwork. First, the newly built team uses its considerable knowledge and skills to 1. Analyze, 2. Ideate and experiments, 3. Prioritize, and finally, 4. Test. Then the whole process loops back through to analyzing the results of the tests and creating more ideas and more experiments. This is the process, and the process is discussed and planned methodically at team meetings either weekly or bi-monthly.